Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this is for Sunday evening, the 30th of March, 2025, 5:15 p.m. Central Time. So as we take a look at what the markets are doing, immediately red in all the stock indices, getting hit one more time. Gold continues to get a mild bid, up $7, silver up a nickel, copper sitting pretty still here, not doing much. The dollar barely higher, the euro down a little bit. Remember, the euro's now taking a look at what inflation looks like. What will they do come April 17th? Do they make another cut? Inflation numbers continue to fall in Spain and France. That's very important. Getting a little bit of a bid now today. So on Friday, as the president was flying back to Mar-a-Lago from Washington, goes out, sticks his head into the airplane, talks to reporters, and says things are going well with he and Putin. 48 hours later, today, the president says if Russia interferes in any manner to make this deal of a truce not occur between them and Ukraine, there's going to be some hell to pay in the way of taxes. So he went, well, tariffs is the right word. As he did with Venezuela, he has now threatened Russia. Don't do anything. If you do anything wrong, what's going to happen if you don't make this peace, we're going to put tariffs on all of your oil. Anybody that buys from it, just like in Venezuela, we will hit them if they sell goods into the United States of 25 to 50% tariffs. Right off the bat, that's another new problem for China and India because both buy a lot of Russian oil. So as much as people say, oh, he's just selling Ukraine down the road, that wasn't quite the statements that you had today. So you might want to check your news and see that. That has given an immediate lift into these markets. In the bonds and the notes, well, you know, people are going to run for the safe haven. Nobody knows what's going to happen as we get to Tuesday, when we see the first day that the tariffs by Secretary of Commerce Lutnick are given to the president. Will any of them leak out? I don't know. As for making things easy, again, you don't know what the president's really going to do, but he did say today, no, he wants these tariffs to go on, and then they'll quickly take a look at who's making what concessions, what are they doing, should they be lowered? He can lower them as fast as he did with Canada, or should he go rougher? He doesn't like what they're doing. Remember, there's another thing. If you get countries that join together against America, he's going to look at them and hit them with additional tariffs. So this is a pretty wild game that is going on right now. You've got to pay attention to that. When we take a look together at the news, you're going to get the March Chicago PMI coming out, and that's at 845. They're looking for 45.4 versus the February 45.5. Dallas Federal Reserve is going to update their monthly regional banking for March at 9:30, and that goes against a negative 8.3 reading. And then for the grain traders, you get some big numbers. You're going to get your grain stocks and prospective plantings. The prospective plantings are very important because it's from here that we measure the rest of spring and summer. What did the farmer actually do? And it can create a lot of volatility when they come out. So having done this most of my adult life, I would say that it's time to take a good close look. Do you want to be a hero or not? You got to make a decision. But after that, to me, the game starts clearing up and I start making my moves back into the grains in terms of for my subscribers. So I can tell you that that's how I'm going to look at it. On the S&P, for the month, we are down 6.28%. So coming down, are we going to get down towards this 5,400 level, which is the 18-month moving average of closes? Don't know. When we look at a weekly chart, well, we're just opening tonight. We're down 0.6%, but down 34 points, just like that. When we look at the chart here, you can see how the market's completely failing. Are we going to go back and challenge right here the 55.09 level that we hit about 4 or 5 days ago? That looks very likely. The trend is down. You have lower highs, lower lows. The market is trading under the 18-week average of closes, so the bias is down. First targets, lower Bollinger Bands again. Remember, you hit them back here 3 days ago, bounced back into Friday, and then let go at the end of the day, and you're again falling with that, and you're in an oversold condition that is not trying to embed. Oversold, interesting time. Let's assume the numbers and all this comes out and scares the heck out of the market in some way. You do open the door up for 51.74. You open the door, but that's 400 points from here. I don't think you're going right there in any stretch of my imagination. I think you're getting down to areas that are interesting, and the market's discounted a lot, and we will see what it does. In the Dow, my eye goes to the fact that you're still oversold. Yes, the trend is down, lower highs, lower lows. If you take a look, I said day on the other chart. If you look, because these are weekly charts, if you look 3 weeks ago, you hit the Bollinger Bands, you bounced, and now you're falling from that again. Sorry, sometimes I confuse those two when I'm switching back and forth between daily and weekly charts. You're oversold. But do you have both numbers under 20? Absolutely not, as we take a look over here at the Nasdaq. Do we have the same type of chart pattern? Well, you can argue. Here's what the market did for the week. For the week, you actually had an outside week up as of Friday. With today's action, you take out Friday's lows. So this is the correct swing line, and the market's already hit one of the targets, the Bollinger Band again. Now, if it drops down, the next big support's 18,106, about 100 and maybe 120. Well, let's call it about 1,300, 130 points lower. I don't know. Interesting. In the Russell, you're down into all kinds of support. The 100 week, the 200 week, the Bollinger Band. You hit that 3 weeks ago, bounced, you're coming back. And as you can see, both numbers here for a change, they're both under the 30 level. So the weakest continues to be on all four this market. It's the first one trying to embed. It keeps coming down to all the key moving averages where the others haven't. This is just the weak sister. And how did we hear, if you'll remember, December? We're only in March. Oh, the Russell's where you got to be. I heard that from so many traders. Well, you've had your head handed to you if that's what you think. Now in the DAX. So in the DAX, you keep your eye on this. When it reopens, where are we going to be is the big question. Are you going to keep the embedded reading or lose it? If you lose it, you open the door to come down here. Why is it backing off? Well, what's European tariffs going to look like? We don't know yet. We will know on Tuesday. So as nice as the market went up for all the right reasons, they're spending more money. They're going to do more in defense. They're spurring their economies up. They're going into debt. Makes all the sense. But what are the tariffs going to look like? So you've pulled back. You're stepping out of the uptrend if you lose that. When we look at the Board of Trade's 10-year notes, you can see the market has been playing in between the 100-week average in green and the upper Bollinger Band. Safe haven buying without question is taking place here. Market's scared, as you should be. What do these tariffs mean? Do they stay on a long time? Do they come off right away? You know as much as your neighbor, which means nobody knows anything. I am not convinced that the president's own cabinet knows what he's going to do. I think he fires from the hip. They all give him his input, and then he does as he wants, and that'll be on what day? Tuesday. Tuesday's when he gets the numbers from Lutnick. Are they enough? Are they too severe? Who knows what he's going to think. Overbought, fighting the battle, you can see it right there. So now we come to the dollar index. And the dollar's been getting beaten up, which is one of the goals of President Trump. Since he's come into office and the market had that initial flurry, oh, he's in, he's going to do all this. Now the market's rethought it. And you've gone from over the 110 level, now you're down to 103.77. Maybe you're going back even further. If you want to go down to the 102.30 where the 200-week average is, who's there to argue that? It can happen. There's no buy, no sell signal. This is very, very scary time in that market. The euro's still in an uptrend with higher lows, higher highs. But as I predicted 4 weeks ago, you're in a brick wall here. You're at a 200-week average. You're at the 100, and you're at the Bollinger Band. And I know you stick your head up, but you didn't go anywhere. So that becomes the problem. What is the next phase here? I'm of the opinion that you're going to see Europe lower interest rates, the European Central Bank on the 17th. I view that the tariffs will be digested. The bank's going to say that we need to provide the economy with more. Things have changed in the sense that we're spending more. The debt levels are going up. We need to really spur on the economy, get our defense industry going, blah, blah. So I think that that's going to be an interesting play that we all keep our eye on. In the Canadian dollar, if you purely trade off cycles, this is still in an uptrend. Now, what's going to happen with their tariffs? Mark Carney, President Trump, they had a good meeting, according to the president. What does that mean? First of all, we don't know who's going to be the next premier after Mr. Carney because there's a snap election April 28th. But at this point, does Canada lash back at America? Because that's part of the running of Mr. Carney, that Canada's bold, they can withstand this, they're going to lash back with their own. And Polvier is the opposite. We have to work with America. We have to do certain things. We will see. The polls, which were this wide at the beginning of the year, have done all of a sudden this. In fact, we should get some new poll readings this week. We'll find out where this all plays. In the Japanese yen, well, the market is, as you can see in momentum, still overbought. There's nothing really happening here. You've run into a brick wall, again, of the Bollinger Band and the 100-week average of closes, keeping that market under control. Bitcoin taking another beating tonight. You're down to 82,415. Here's the one thing you know. Bitcoin's not your safe haven buy. Gold has been. Second thing you know. Bitcoin looks a lot. Run your chart and put the Nasdaq over it. The two seem joined in very major ways. That's where I think you're really at with that market. Then on the energy markets, so if you lose Russian oil to the marketplace, if you lose Iranian oil via all that's going on, the president threatened Iran this weekend that if they don't start negotiating, we're prepared to level some areas there. So it's a direct threat, no question about it. And of course, Venezuelan oil. So the president's gotten 3 oil areas that he's reducing the supplies of if he doesn't get his way immediately on things. Venezuela's already felt it. He's geared it up already in Iran, and Russia could be next. The trend is not up. On a weekly chart, lower highs, lower lows. This is your resistance area, 74.54, yet less supply. What does that do to the market? When you look at the NYMEX, right here too, you're coming into the resistance area. So as much as and as bullish as that all sounds, the chart action is not in sync with that. When you look at gasoline, you know that I put out a bullish report recently, and I intend on doing another report on something after I know what the tariffs are this week. So be ready for me to do that. Probably, I'm going to guess Thursday. You can see where you're at right through here. You put it together. Those are your games. Now, one of the things I'm doing is I'm going to put together immediately a quick sale for those of you that want to join in with me. I don't think I even have it here. If I do, it's great. Yep. You're going to be able to come in for an introductory price for 30 days, and you're not committed after that. It's up to you to get my futures, my ETF combo, or other things. $3, roughly 95 cents. 1 day sale. Maybe I'll go 2. It's not yet. I'm going to launch it tomorrow. It'll first go out by email. So if you're on my email list, that's how it works. If you're a current subscriber, this is not for you. This is to get people into it. If you cancel and go to it, I won't honor it. So don't even bother trying to do that. This is to get people into us. It's a one-time trial. And then you'll notice as to how, if you want to continue with it, how it all works and where you go. By the way, For those of you on my 30 days, my permanent subscribers, if you go off of it, then you've got to come back at a higher price for a quarterly. So stay where you're at if that's what you've got. We've made some changes to what we're doing. I haven't raised prices in a decade. It is time. So this is a great way for you to all get involved with what I do. I'm Ira Epstein. You have yourself a really good evening. I'll catch up with you all first thing in the morning.